Okay, today we've got something, well, something pretty wild. It looks like a confidential document, and it seems to lay out a plan for maybe the most ambitious and frankly kind of unsettling public offering ever. Let's dig in and see what's going on here.
So what you're seeing here is what looks like a draft S-1 registration statement. And if you're not familiar, that's the official paperwork a company has to file with the SEC before it can go public and sell shares on the stock market. Now, these things are usually super dense, full of legalese, right? But that's where you find the real story. And who's the company behind all this? It's a firm called, get this, Humanity Incorporated. They're even proposing the stock ticker HUMN. Their plan, as outlined in this document, is to, well, to take humanity itself public. Yeah, you heard that right. All right, so let's get into their pitch. Humanity Inc. is coming out of the gate presenting itself as this really visionary company, with a super bold mission. Their whole argument is that our economy right now is just massively inefficient. Why? Because there's all this hidden value in human life itself that we can't buy or sell. And their big solution? They want to build the financial plumbing, so to speak, to unlock all that value. Now, the core idea here, the absolute heart of their business, is a concept they call assetization. So what does that even mean? Well, essentially, it's this. If you can measure something reliably, and I mean anything, from your ability to focus to your emotional state, then you can turn it into a standardized financial product, something that can be bought, sold, and traded, just like a share of stock. And the scale of what they're proposing here, it's absolutely staggering. We're talking mind-boggling numbers. Humanity Inc. is claiming that the total market for all these new assetized human capacities is bigger than the healthcare, education, labor, and carbon markets combined. Let that sink in. They're not just creating a new product. They're talking about building an entirely new economy based on, well, us. Okay, so what would actually be traded on this new exchange? I mean, what are the products? The filing breaks it down into several product families, and the language they use is so corporate and sterile. It creates this really bizarre contrast with what they're actually talking about, which is deeply personal stuff. Let's take a look. So check this out. Under mind markets, you've got things like cognitive real estate, which sounds a whole lot like renting out your brain's processing power, right? And behavioral futures, which are basically contracts betting on what a person is going to do next. Then we move to body markets, and they're listing mortality derivatives. I mean, that's literally creating financial products based on life and death, and something they call the empathy economy. And if that's not wild enough, you get to being markets, which are even broader. They're talking about an extinction exchange for making financial decisions about entire ecosystems. It's a lot. And the way the company justifies all this is by framing it as a simple, logical progression. They call it the assetization pipeline. It goes like this. Step 1, reliably measure something. Step 2, create a standardized contract for it. Step 3, let the market discover its price. Step 4, assign property rights. And boom, step 5, you've got a secondary market. It's presented as this almost inevitable, unstoppable 5-step process. If A, then B, then C. Okay, so far, this sounds like a pretty standard, maybe a bit sci-fi, but standard corporate pitch. But you know how it is with these kinds of documents. The most important stuff is always buried in the fine print. And this is where the whole story takes a massive turn. You see, every one of these S-1 filings has a section called risk factors. It's where the company legally has to tell you everything that could possibly go wrong. And the risk factors section for Humanity Inc., well, it's different. Really different. Okay, look closely at the first letter of each of these risk factors. Rationality risk, externalization risk, securitization, inalienability, systemic correlation, totalizing incentives. What does that spell? RESIST, resist. Whoa. So this isn't an S-1 filing at all. It's a warning. It's a brilliant critique of this whole idea disguised as a corporate document. The entire thing is an elaborate thought experiment designed to show us just how dangerous this path could be. Let's just take that last risk for a second. Totalizing incentives. The document makes a powerful point here. It warns that once everything has a price tag, joining these markets, it isn't really a choice anymore, is it? I mean, what happens when you have to sell your cognitive real estate just to get a job or to get health care? The whole system becomes coercive. It's a perfect illustration of how a quest for efficiency can quickly turn into compulsion.
But here's the other brilliant part. This document isn't just a warning sign. It's also a kind of manual. Because hidden inside all that corporate jargon are detailed proposals for how you could actually build systems that protect human dignity. The argument is, hey, if these kinds of markets are coming whether we like it or not, then we have to engineer resistance right into their core design from day one. For instance, look at this idea for a governance model. It's a dual board structure. On one side, you have your standard fiduciary board. Their job is simple: make money for the shareholders. But on the other side, you'd have something called a mission council. Think of it as a group of ethicists, public interest experts, and they would have real teeth. They would have the power to veto any action that threatens basic human dignity, like if the company wanted to change the privacy rules or start commodifying something new.
And this is the key takeaway, really. Resistance in this context isn't just a slogan you shout at a protest. It's a set of actual technical tools. We're talking about things like inalienability flags that can be coded directly into a contract, things that you can't just click "I agree" to wave away, or a public, legally binding do not commodify list, or enforceable rights that let you actually take back your consent and even reverse a transaction. These are ethical guardrails built right into the source code of the market itself.
And all of these different tools, all these safeguards, they're all guided by one simple but incredibly powerful core principle that runs through the whole document: keep the person and the planet unpledged. The basic idea is that the core attributes of who you are as a person and the parts of our planet we can't get back should never, ever be allowed to be used as collateral. You simply cannot pledge your own personhood. Period.
So at the end of the day, this whole fictional prospectus is really a call to action. It cleverly uses the language of finance to paint a vivid picture of a possible future. But it's not trying to sell us on that future. It's doing the opposite. It's giving us the tools, the vocabulary to see it coming and to make a conscious choice about it. And it's a powerful reminder that none of this is set in stone. This future is one we can still choose not to build.
And that really brings us to the final critical question. A question for all of us, really, because the document warns that this whole process, this assetization, it often shows up disguised as convenience. So the next time a new app or some new smart device or even a new policy at work offers you a cool feature that measures some little part of you, it's worth pausing and asking yourself, is this just making my life a little bit easier? Or is this the first small step down that assetization pipeline?